So the idea for this business is brilliant. They found this hidden asset in people's homes where they had extra bedrooms and extra space, and were able to unlock this value and find this sort of neat way to utilize this hidden asset essentially. And now they are the largest accommodation provider in the world, and they don't even own any of the property. And they're in this rare club of businesses where the name of the business has turned into a verb. And this has allowed them to have this massive network effect business. And in my opinion, I just think it's very unlikely that this is going to get disrupted. I think they're riding this digital nomad and travel mega trend, and I think it's here to stay. So should we invest in Airbnb and be part of the story? Let's jump in and take a look. Okay, to get a feel for the growth rates, I'm going to look at revenue first for the past 5 years. Now, I can only go back 5 years because Airbnb hasn't been public for that long. So it's grown from 2.5 billion to 8.4 billion. And if I put that into a compounding growth rate calculator, we get about 27%. The next thing I want to look at is I want to look at the gross profit as well. And I can see the gross margins have been improving, which is a really good sign. We've gone from 1.9 to 6.9. So 1.9 to 6.9 over a 5-year period. And that has been growing at about 29%, obviously a little bit higher because of the increasing margins, which is interesting to see. The cash flow statement, I want to look at the cash from operations. This is how we're going to work out some sort of free cash flow number, or at least get a feel for how the cash has been moving through the business. And it's coming from a pretty low base. So this is really not a great number to look at. We can see in 2020, it was a negative year, obviously, with the pandemic shutting everything down. That would obviously affect Airbnb pretty dramatically. So look, I could do a growth rate here. I'll show you what it looks like. It's 250 million to 3.4 billion. We've got a growth rate there of 68%. But like I said, it's because it's coming off such a low base, it's probably not fair. I think I'd prefer the previous numbers of about that 25 to potentially 30% range for growth rates. Now, that's the historical past. When I go into the Airbnb shareholder letter, I can look here at the key financial measures, and this is I'm looking at Q2 2023, regardless of what time you're looking at this, if it's Q3's out or Q4 or it's in 2024 or whenever you're watching this video, it still doesn't, we still want to look at just the year-on-year growth to get a feel. So we've got about 18% year-on-year growth for revenue. We've got free cash flow, which is interesting, which is what we're going to use to measure. It's around about 13% year on year from the previous period. So this will fluctuate quarter on quarter quite a lot. So I'm wanting to look at this trailing 12 months free cash flow number here of 3.9 billion. It's about 4 billion in free cash flow. That's what the business is spitting out at the moment and growing, which is kind of cool to see. So there's a lot of nuance here. Figuring out growth rates is definitely, you got to think of all the little things. So you got to think of how management are thinking about the future and what strategies they have to grow the business further and what expansion opportunities do they have. And with Airbnb, obviously they can expand into more countries, get more people listing on there, take more market share off traditional lodging. But I don't know, they're already pretty big now, and these are sort of what I think the growth rates kind of feel like for me. So I think for the next 5 years, we're going to get sort of that 15% range. That's what the year-on-year numbers look like at the moment. But we've had a good 5-year period. So I'm going to give them the benefit of the doubt that they can do 15% moving forward for the next 5 years. And then I'm just, as they get bigger, the market that they're in, I just don't think it can continue at 15%. I think it's going to slow down naturally as the law of large numbers affects this business. Now I've got a 10% discount rate. That's just to calculate. I'm using 10% for all investments that I look at to get sort of a base level. It's a little bit better than the S&P 500. This is what institutional investors would be looking for. Airbnb being a very good business with large competitive advantages, I think some institutional investors will be chasing this 10%. And I would argue that this is around about where fair value will be. So the multiple I could sell it for after this 10-year period, I think we could get about a 20x for it. 20x on the free cash flow number, which we said was about 4 billion based on the Airbnb shareholder letter. And the shares outstanding number here is about 0.68. They've actually reduced their share count a little bit of late, but they have large stock-based compensation, so be careful of that. So that sort of cancels each other out. I don't think that share count's going to grow too much more significantly now they've got some good free cash flow. I don't think they need to issue too much more stock. So hopefully they balance out the share compensation with buybacks to keep that number nice and stable. And I've just pulled the total cash and total debt number from TIKR terminal here. I just looked at the balance sheet. I got here the cash, total cash and short-term investments here. You can see it's 10.3. And I went down and had a look at the long-term debt. It's about 2. So I factored those in here. And it's telling me that fair value for Airbnb is around about $212 a share. And depending on when you're looking at this, for me today, I'm looking at it and it's about $147 a share. So it is under fair value, which is a good thing to see. So as you can see, the calculations of growth in particular require a lot of nuance and research. I keep track of this in a weekly report that's called Yes Stocks, No Stocks. There's a link in the description for this. You can get it each week and it's free. It isn't some boring newsletter. I jump straight into the valuations. There's no BS, there's no fluff. And I highly recommend you joining because I've done a lot of the hard work and heavy lifting for you, and you can just keep track on it each week. The next thing I want to look at is I want to do a 5-year valuation. Now, what I've done here is ignore the fact that it says NVIDIA here. I'll actually just change that to Airbnb. And the current revenue is about 10 billion. What I think the 5-year growth rate of that revenue will be is about 15%. Oh, that could be 10%, that could be 20%, it could be 0%. I feel 15% on average over those 5 years based on my research, but this number will change as more information comes out over time. The estimated free cash flow margin sits at the moment at about 36%. That could creep up maybe 38, 40% as they get more efficient in the business, but at the moment it's 36%. I think that multiple of the free cash flow at about 20 is fair. And there is a little, like I said, there's some stock-based comp, but they have been buying back shares. But let's assume that the stock-based comp does outstrip the buybacks. So we'll just to be conservative, we'll say that there is a bit of a 1% dilution rate here. And if I put in the current market cap, which I'm just going to have a quick look at. So depending when you're looking at this yourself, at the moment for me, it's 93 billion. So I put in 93 billion here. And it's telling me that in 5 years, the share price around about $200, and from this $93 billion market cap, that's about an 8% compound annual growth rate. I want to get this number to 10% so we can get that to sort of like a fair value. So if it was 85 billion, so it's just a little bit under what it is now, so about $140 or so a share, would get me this 10% compound annual growth rate. So that's how I sort of look at this. So over here, I've got the DCF number at 212, my 5-year number at about 140. Somewhere in this range is probably the fair value. So I'm just going to say for now, it's about 175, about somewhere in the middle. And that's sort of how I get a good estimate of fair value here. And like I said, these revenue growth rates can change, and that's what I will be adjusting over time as new information comes out and I understand the business more and more. I might put this number higher or lower, and that could affect my valuation. Now, $175 per share isn't what I'd actually want to buy this at. That's where I think it's at its sort of full value. So I want to get closer to a 22% compound annual growth rate. So to get that, we're looking at around about 50 million in market cap. So since it's about 93 at the moment, you'd have to nearly cut this price in half. So probably somewhere around $75. $75 would be about a good price to buy, I would say, in my opinion. That would give me this potential of 23% compound annual growth rate. My DCF method will probably tell me something similar. So I want to get sort of 22%. And it tells me I want to buy this at around about $96 a share. So somewhere between sort of, looks like under 100 would be interesting buying. At around about 75, I feel pretty confident. Somewhere in that range, I think we're looking at an interesting buy price. But at the moment, with the share price being look closer to its fair value, it's not in the buy range yet for me personally, but it's one that's could, things fluctuate. And if we have a look at the stock price over the previous sort of 12 months from when I'm recording this, it has been down to, it's been down to $84 a share. So that would have been interesting buying under 100, creeping down to that sort of 75 number. It's been under 100 a couple of times, and yeah, it would have been, if I had done this fair valuation earlier, it would have been telling me under 100 was an interesting time to get in, and that potentially could be correct. So yeah, be patient on this one. Airbnb is definitely something that I like to watch. I really like this business. I hope you enjoy how I have explained how I do a fair valuation here. Like I said, there's a lot of nuance here. And yeah, this is going to be changing all the time. So I'm going to keep track of this and record this in a weekly report that's called Yes Stocks, No Stocks. The link in the description below for that. And joining Yes Stocks, No Stocks will keep you up to date. All right, I hope you've enjoyed, and I will see you in the next video.